Hi, I'm Jim Mendelson, a managing director and a co-founder of MGI Research. Today, it's my pleasure to have with me Terry Tillman, a managing director in equity research at Truist Securities, a corporate investment banking firm that was formed through the combination of SunTrust Banks and BB&T Capital Markets back in late 2019. Terry has had a long tenure on Wall Street, and we've known each other for close to 20 years, wherein he worked at my old firm, Soundview Technology Group, with me as part of the team covering the software universe. Today, Terry is a leading analyst following the application software and SaaS companies. And as many of you know, 2020, while a horrible year for COVID, was a remarkable year in terms of stock performance, and particularly in the software and application space. So it's now, without further ado, I'd like to turn it over to Terry, who will give us a view from the street. Terry, thank you.
I'm really excited to be talking today and providing a Wall Street view on software and talk about SaaS valuations. My name is Terry Tillman. I'm an equity research analyst at Truist Securities. What I'm going to do today is I'm going to give a little bit of background on myself in terms of what an equity research analyst is, a day in the life, how we try to differentiate and how we try to help investors ultimately make money investing in software stocks. I'll get into some of the salient points and key drivers for software that we believe are very important going forward and relate to valuation and investing. And then we will talk about stocks. We will talk about what has been great stock performance for software over a multi-year basis and some of the valuation dynamics going forward. So with that, let me get into myself a little bit. Again, thank you for the opportunity. As I said, I'm Terry Tillman from Truist Securities. Truist Securities is actually the name for two banks that merged. One was SunTrust Bank and BB&T. They merged to form the sixth largest commercial bank in the United States. And now we're called Truist Securities. I've been doing this at Truist since 2017. My job as a research analyst is really to be a domain specialist, to really understand all the puts and takes and all the fundamental dynamics of an industry. In my case, it's software. So I'm supposed to be a specialist to help what are my clients, institutional investors, really understand the landscape of software, the opportunities, the threats, the strengths, et cetera, of this industry, and really know it inside and out. And as part of that process, I focus on leading software companies in the industry and try to help investors understand what are good software companies to invest in. And in the case of investors, what I'm talking about here, it's not retail investors, it's going to be institutional investors. So that would be portfolio managers at mutual funds, hedge funds, or pension fund managers. And what we're striving to be is the go-to analyst to help investors understand what is a very dynamic industry, and that's enterprise software. We try to differentiate versus our peers around actually talking to customers, getting the voice of customer from users of these products. Why did they buy the products? What stood out with the vendor as opposed to maybe going with another vendor? Are you happy with the product? Is this the kind of software solution that you really need to run your business? Would you be able to operate without this software? So we really try to understand kind of the hearts and minds of the software users. We also talk to systems integrators and consultants that are quite often really important in terms of influencing who buys what. And lastly, private companies. Private companies are really an important part of our research process. Private companies often can give you perspective on public companies because quite often they're competitors to the companies we cover that are publicly traded. But they also sometimes can grow up and scale their business and become the next interesting public company via an IPO. What we try to do in terms of codifying our industry knowledge is through written research products that our institutional investors would consume. We publish a weekly piece called Monday Morning Missives. In the spirit of alliteration, we also have something called a digital dossier private company profile series where we highlight private companies. And then lastly, as we're talking to our industry contacts, we're regularly writing on all the individual stocks that we cover in terms of interesting updates on product momentum, new business activity, et cetera. The last thing I'll say is we've been involved in 8 IPOs since I've been at Truist Securities, many of which have represented high growth SaaS companies. And it's really fun to watch these private companies grow up and sometimes be highly successful public companies. The last thing I'll say about myself, and then I'll move into kind of the key drivers for the industry is, from prior firms I worked at, and when you add up with the IPOs we worked on at Truist, we've worked on over 30 IPOs, private companies going public. So a lot of experience seeing private company innovation. In terms of my coverage, we cover 24 software stocks. For perspective, there's probably 150 plus publicly traded software companies. So by no means are we covering the entire landscape, but we believe that our 24 names we cover have a lot of vitality. And you can see on the page in terms of our software coverage, it really is wide ranging in terms of the types of companies. As large as Salesforce and Shopify, which I would consider mega cap in terms of their market cap, to really a sweet spot of companies between $5 and $25 billion in market cap. But that's basically our addressable market. This is what we're focused on every day, trying to find the good and great stocks in our coverage. And then the next page here, in terms of private companies, I mentioned this earlier. I would say one way we do differentiate in our research process is really talking and being close to the private company innovators. Public investors care a lot about what we see and what we're hearing about the next generation disruptors. And you can see from here, a variety of these companies have either been private companies that scaled and were either bought out in a position of strength by a strategic buyer, some of which have actually become public companies themselves. The next thing I want to talk about is key industry drivers. And then after that, we'll talk about stocks, what they've been up to, and we'll talk about valuation dynamics. In terms of industry drivers, there's a lot on this page. Some of these catalysts are pretty self-explanatory, but I'm going to first start with digital transformation. I mean, this is definitely a phrase that we hear every day. It's a buzzword for sure, but it is real and it's an imperative for all businesses as well as public sector. So whether it's improving customer experiences, which nowadays are increasingly digital in nature, and this has been further spurred by the events of COVID and the pandemic, increasingly business is done online. So really digital transformation helps around customer experiences and improving it, and just better engaging with your partners. And if you're a public sector entity, better serving your citizens. The other dynamic around digital transformation is also helping just improve operational efficiency via software. The next page here, what you see here is digital transformation is a strategic imperative. There was a great quote, in our opinion, from the CEO of Microsoft, really in their first quarter after the COVID events started unfolding. It really kind of lays out well what they were seeing in their own business as a large enterprise software company that it's a market leader. They said, as COVID-19 impacts every aspect of our work and life, we've seen 2 years worth of digital transformation in as little as 2 months. I think that's a profound statement. The other thing you see on this slide was taken from an investor presentation from Salesforce at their Analyst event. And what you see here is this crossover between what was typically IT spending and technology investments to keep the lights on for your IT, as opposed to digital experience investments. And you see over the next couple of years, a very important crossover where the money spent on what is earmarked as digital transformation will surpass traditional IT spending. The next slide just shows you some survey results in terms of, what are some of the drivers of digital transformation. And I do think on the right here, operation resiliency, particularly when employees are now working from home, and customer experience definitely rise to the top. And then this last slide, as it relates to kind of digital transformation, the advent of public cloud computing and just a wide proliferation of SaaS software solutions is really helping drive and power digital transformation. And you can see this from this IDC data. The next investment theme that I think is really important and was really topical in 20, and I don't think it's going away anytime soon, is just the concept of reimagining work for knowledge workers. It was accelerated by COVID and the work from home dynamic. This slide, it's pretty self-explanatory, but basically it shows Zoom video communications, which I think we all know Zoom. A lot of us are doing Zoom calls all day long in our work life. Our families are doing it related to school and teaching, and it's ubiquitous. But what you see here is in the last reported quarter for Zoom, they saw 365% year-over-year growth in revenue. That's profound growth, and it reflects rapid adoption of tools to communicate and collaborate remotely. And on the right, you see the business that Zoom had with bigger businesses with at least 10 employees. That growth was even more robust at 485% year-over-year growth. One thing I also want to touch on and kind of double click around this idea of reimagining work and the knowledge worker and the tools to help them be more productive. What this slide looks at, because we were getting a lot of investors in 2020 asking us about, look, how do I actually play this theme from work from anywhere in empowering knowledge workers? And so what you see here is we called them 1A type COVID plays. The core business remained robust even amid the recession and the initial COVID impact, but then there was incremental demand driven by COVID. And here you see the names, I'll identify them on the left. Ring Central, which is cloud-based phone, messaging, and video conferencing. Five9, cloud contact center. Everbridge, which is an interesting, unique company around mass notifications and emergency communications for keeping employees safe, citizens safe, et cetera. And then two e-commerce plays. And I'll talk about e-commerce in a minute, but BigCommerce and Shopify. These were investment stories that really benefited in 20 because of just they were right place at the right time. And you can see it in their tremendous stock returns. Next, moving to e-commerce. E-commerce is definitely a mega trend. We were already seeing the share of e-commerce to total retail sales growing steadily over time. We believe that we've seen an acceleration and a pull forward of e-commerce adoption. And look no further than the success of Shopify. We have some data points here. You can read these on your own, but like during Cyber Week, which is a very important selling season, their merchants grew their value of products sold online 76% year over year to $5 billion just over the Cyber Week timeframe. Another thing we would highlight, and covering software companies for 20 years, we would say in their last quarter that they reported, we've never seen as much revenue upside as we saw from Shopify. It was hundreds of millions of dollars of revenue upside. And lastly, this is translated into a really big market cap in a really winning stock, 140 billion plus market cap. And this is not a PE, this is a sales multiple, 34 times 21 estimated sales. The next theme and important, I think, driver or catalyst for software has just been the focus on customer experience. It is paramount now, paramount to business success. In the past, it was about designing good products and services. But really, as we've seen from the likes of Medallia that went public, and they talked about this in their S1 filing, and we've seen it in other survey work, really the experience a business provides the customer is equally, if not more important than the underlying product or service that they are actually getting. It's really about, did they feel like it was a good personalized experience? There's a lot of technology spending now around improving customer experiences and also having signals when it's not a great customer experience. And what are we going to do to make them a raving fan customer going forward? A lot of spending in this area and a bunch of ways to play this from a stock standpoint. The next thing I want to touch on here is just the proliferation of SaaS solutions transforming lines of business. We've seen a lot of SaaS adoption around key workloads like HR software, accounting software, CRM software, but we've seen just a whole slew of companies, innovators in these interesting niche areas. One area that we're really passionate about is Office of Finance. Your CFOs, treasurers, your chief accounting officers now have exposure to lots of off-the-shelf software that can do everything from account reconciliations, automate AR and AP processes, close the books much faster, CPQ, as well as treasury management. So instead of spreadsheets or really having a very labor-intensive process, there's a lot of SaaS solutions that are benefiting from the Office of Finance transforming its ops. The other area where we're seeing a lot of interest in strong buying wave of software is around sales and marketing. We've seen transactional CRM and marketing automation systems adopted en masse over the last few years. Now we're seeing a lot of tools such as go-to-market intelligence software, sales training, sales engagement. In the MarTech area, things like conversational commerce via SMS marketing. There's a big buying wave right now in sales and MarTech tools to really effectively help sellers sell while they're working from home. And then a couple of other key themes that I think have been also exciting for us and very topical for investors is just vertical software, vertical SaaS. We could see this in financial services and healthcare and financial services. These cloud banking software solutions, and some of which we cover companies in this area, they really help banks really quickly spin up a triple P lending program to help save, in some cases, small businesses through the pandemic last year. That would not have been possible without software. In healthcare, you're seeing drug discovery and clinical drug trials optimized and accelerated because of the use of cloud computing and software, as well as new forms of healthcare delivery like telemedicine. And then just lastly, I'll touch on the concept of operational efficiency and cost reduction. Those are maybe don't get as much of the press as things related to growing revenue, but they're ever-present topics for business executives. And one of the areas that I want to focus on is the concept of process or robotic process automation. It's called RPA. There's a lot going on with RPA solutions and innovation to really take what were rote tasks being done by employees and really leverage software bots to automate those mundane processes, whether it's in the back office or customer-facing functions. And also related to RPA, we're seeing some really interesting innovations around tools that really a line of business employee can use, whether it's a low-code or no-code platform, to stitch together their own RPA solutions. And then just one of the last kind of key drivers or catalysts, or where we see excitement and investor interest, is really the promise of big data, AI, and machine learning really being realized. So, we've been talking about one-to-one marketing for a long time and really understanding customers. But what you're seeing now is the enabling technologies like data lakes, machine learning. They really are starting to deliver on the promise of harnessing big data. And I think look no further than B2C companies. We spend a lot of time with B2C focused software companies, and leveraging first-party consumer data is more important than ever. And they're really able to start really doing that to better market to prospects, strengthen customer loyalty, and finally deliver on personalized experiences. So all of that was a whole lot to listen to, but I appreciate the patience of listening to me on drivers in the industry. I think what now I want to talk about is really just looking at stock performance. What you see on the next slide is just the stock returns in 2020 for my coverage. The mean and median return for our names, 93% and 81% respectively. Of note, we had 11 companies that more than doubled their stock price in the year. And you can see that they well outpaced broader benchmarks, whether it's the NASDAQ, the Russell, or FANG stocks. The next page just brings this all together. We've had a lot of strong growth engines and drivers in place, some of which even accelerated amid COVID, amid the digital transformation. Stock prices have acted well as a result. And what you see on this page is really notable multi-year valuation expansion. It's not just for slower growth companies or kind of mid-growth type companies, but even high growth companies. And if you see here, 30% plus growers going back to January 2018, the revenue multiples are usually what software investors are looking at. In that high growth group, it's expanded from 6.5 times sales to 28 times forward sales over just a couple year period. Clearly, there's been increased investor interest. There's a lot more to look at in terms of high growth stories after we've seen a lot of IPO activity. And one might ask, well, why would somebody buy or own a stock at 28 times sales? From our work and talking to investors, yes, looking at sales multiples 1 or 2 years out could make that look like a very expensive proposition and not an interesting risk reward. But I think the reality is many investors that are looking at these companies, they really believe they can have compounding growth for many years. They're looking at DCFs that go out 10 years. And their view quite often is, look, I think this company today, it might look expensive, but I think they can grow 30% plus for many years. Hence, I think it'll be a great stock over time. That seems to trump the focus on profitability and just other near-term metrics. And then I've got some slides to just really kind of show it all here in terms of what have been great stocks. You'll see here with Shopify, rapidly scaling revenue. They've become a verb for e-commerce, and you are starting to see some profits and cash flow. Same thing with Ring Central, strong stock over time, the really good compounding growth, and they've been showing really nice operating leverage, gross margins expanding, and cash flow expansion. The last two would be Coupa. This has been a great long-term strong grower, a CAGR of 48% growth, showing some cash flow leverage now. And the next slide, and I've just got a few more here, really this just shows the notable difference in valuation levels for high growth companies considered 30% plus growers, trading, again, a mean of 28 times sales, 14 times sales for 20 to 30% growers, and 8 times for 20% or under growers. M&A going forward, I think is going to be very important for support for valuation and stock prices. We saw Salesforce announce the acquisition of Slack towards the end of last year, $28 billion proposed acquisition, over 24 times 21 estimated sales. I think in 21, we're going to see a really big year for M&A. It was somewhat stymied when COVID first started occurring. People didn't know what to expect, both the buyers and potential sellers. I think in 21, strong stock currencies, access to low cost capital, we're going to see a lot of M&A. And then lastly, it's been impressive IPO performance in 2019 and 20, and we would suspect we're going to see even a lot more activity in 21 and beyond. I appreciate the time, and I hope everyone has a great 2021. Thank you and take care.